Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 8th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environments, how that all comes in to impact the markets with some of my market analysis. Well, I'm going to do the same thing for you folks out there, but I'm going to go a little bit further, and we're going to talk about option strategies that I'm implementing in my portfolio based on these assumptions I come up with from that economic, geopolitical, and market analysis. So, for you guys though, what I've done is over my 25 years of trading options, I've streamlined the process for finding the most appropriate option strategy for any given assumption. I'm not just talking about, hey, you got a bullish assumption, you go out and buy calls and you get a 500% return. No, that's not what I do. What I do is what we look at our market assumption, dig into that underlying and find a strategy, whether it's got high volatility around it. That's something we're going to be looking at. All right, so you'll be able to follow along a little bit in these daily market commentaries, but check out those webinars because I really drilled down on those details in those webinars. I don't have enough time to really go over that here for you guys. Sorry. Anyway, let's get on to the economic data across the pond. It being a Tuesday, we should get some, but it is an Italian bank holiday, so probably going to be slightly quieter across the pond. Just in general, when they start having holidays, it seems to shut down everywhere. But anyway, we did get some employment changes in Europe, which was nice to see. 1% expected to be 0.9%, so the employment change being better. That shows that they're starting to pick up a little bit of steam there. And the German economic sentiment coming in at 55, expected to be 45, so really doing well there. Now moving back over here to the United States, we got our NFIB, which is National Federation of Independent Businesses. This is one of those I really like to look at, not mainstream media or or Wall Street doesn't really look at this number, but for me, this is a great gauge as to how the small business is doing. Obviously, it's a small business index, but that is going to be something that is a tell as to how the economies around the United States are going to be working, because the small business is a major driver of that velocity of money that I talk so much about. You spend money with the big business, that money kind of gets lost a little bit. But when you're spending it with a small business, 80% of that money gets recirculated back to the community. And that's what we're talking about for velocity of money, because when it's getting respent, that means it starts helping out even more so. But that number did come in at 101.4, expected to be 102.6, so slight miss, but obviously still encroaching on those high levels we saw during Trump's campaign before the coronavirus hit. Kind of dropped off, but up in these hundreds. We haven't seen since basically before 2008, not even really during Obama's administration when they were talking about how good the economy was coming back. We never really saw the small business really accelerate like we are in this economy. And why? Because of the bailouts. I mean, if you're bailing out big business, the small guy is getting hurt. All right. So anyway, enough of that soapbox. On to non-farm productivity revision, 4.6 expected to be 4.9, so a little bit better than expected on that front. All right, let's get on to the overall markets. Crude oil still holding on tooth and nail to this Fibonacci, this 61 Fibonacci, which lines up right there at around 45.36. We can call it $45 a barrel. I think that's really kind of what people are going to be eyeballing. But when you pull up it's really around 45. All right, so enough said about that. I would like to see a breakdown and go back down to that point of control, which would be around $40 a barrel, and therefore create more velocity of money. If people aren't spending money on gasoline, they're going to spend that $10, $15 that they're saving per tank of gas, which a lot of Americans fill up their tanks of gas every week. So that is another $40 to $50, let's call it, a month that they can spend elsewhere in the economy. And that is another aspect of creating velocity of money. Gold futures continuing to move higher here on pace to go up there and test that 1900? Well, we do have a couple of resistances before that. One of them is this 50-day simple moving average that we're kind of bumping our heads up against it. Some people might call it the value area high, where it feels like it's getting a little overextended to the upside when you hit those value areas, as the most time and volume is spent just below that area. Only 15% to the upside, 15% to the downside, 70% spent right there in the middle. Well, you can see why it starts getting a little overextended there. People start wanting to cover their longs when you start getting overextended outside of those areas to the upside, and would like to cover some shorts if they are getting extended over too far to the downside. Right now, kind of keeping our eyes on that 1800 there. All right, bonds. Right back to the point of control here, 172.30 or 173, let's call it, only because that gets me a couple of steps closer here to my 177 handle or 176 area. I'd like to see it go back up to the 177, 178 handle. That means interest rates are going lower. That will help also, right? If people are seeing lower interest rates, that kind of incentivizes people to spend. Creating velocity of money. I mean, you're going to hear that a lot as a theme lately coming out of this bit of a pandemic. One thing we're seeing across the board in the markets today, bonds are moving higher today. I think a lot of that's a talk that the interest rates aren't really going to go anywhere. But what we're seeing is the first round of the vaccine is being distributed in Britain, I believe it was, and some 90-year-old woman was the first person to get it. That's really sent the overall equities higher here. Yes, the FANGs are struggling a little bit today. They're probably the ones that are leading to the downside, but the reopen trade is really what people are starting to focus on right now, and that's why we're seeing the reopen trade. We're seeing casinos, travel and leisure, like airlines, doing well today. Those stay-at-home stocks having a little bit of a struggle as these vaccines are starting to be administered. There's still that whole question as to what's going to happen afterwards and how these people are going to fare throughout all of this that have received the vaccine is what I'm talking about there. All right. And then we've got the VIX is slightly in negative territory there. Dow Jones Industrial Average up 90 points on the day. I would not be surprised whatsoever to see this market actually create an intraday all-time high today. Remember, we talked about that print was over the overnight session there. Again, NASDAQ slightly in negative territory. Why? It feels like it should be higher, but it's being drugged down for the most part from those FANG stocks as that tech-heavy sector is struggling. I mean, we are seeing some good tech stocks move, like NVIDIA, I think, was moving to the upside, or Activision was moving to the upside nicely today. But for the most part, like the FANGs, the Google, Facebook are all kind of dragging on the markets there. E-mini S&P is piercing into positive territory and near the highs of the day. As we'll see here on the breakdown of the E-mini S&Ps, this was that overnight Sunday high that we talked about and was expecting to get that printed during the day. Again, thought again today we were going to move for those highs, try and print that during the day session, especially with the virus vaccines going out there. It seems like there's a little bit of euphoria around the markets and hope that that vaccine is going to be the savior. But it feels like we're getting a little bit toppy right now. Maybe just a small correction before we go to that upside. But for the most part, all I've done is added Walmart to my portfolio. Really low implied volatility, as you can see down here, as it is some of the lowest volatility we've seen. I've got a bit of a bottom build here and now a confirmation on the upside. So this little bottoming pattern here, I'm expecting to go up and test that all-time high. So I decided to go in and play it for that all-time high going into the March. Long duration, want to limit that theta decay, right? Low implied volatility means that If volatility is affecting those further duration options more so, which is a rule of volatility, is it affects further duration more than the nearer duration, and I'd say that's 99% of the time. But with that being said, if volatility starts expanding, I get to profit because of just that volatility expansion. Also, with the confirmation going to the upside, which is what I expect, I picked my strike location to be 155 calls. That is what I bought in the March. It also lines up with my rules that I go over in the webinars as to strike location for buying long calls in this type of environment. So following all of those rules that I set aside in the webinar, those guidelines, if you will, that you guys can follow along in order to be successful, increase your probabilities of success. Yes, I do have a bullish assumption here. And at the beginning, I was ranting on, no, we don't just pick long calls out of a hat because we are bullish. This follows the guidelines that I set aside for you guys to follow. I stay mechanical, and this is one of the ways that I do that. And bought those 155 calls in the March for $4.95 there. Just looking for it to go up, pierce that 155 area, and I will be at my profit target most likely. All right, and that's about it. That's all I've done. I did. Do I want the penny or do I want the trade? I often ask myself that, and you should too. But what we're talking about here is PENN blasting off to the upside. Actually, right off the bat this morning, it was in negative territory. And if you guys remember, I've been long PENN since basically $4.50 is where I got long it. I also have been staying mechanical with this trade and lowering overall cost basis on that trade throughout the time that I've owned it. And I've decided to today was going to try and cover that trade there. And I went in there and tried to put in cover the 90 calls. If you guys remember, back on November the 13th, I did some covered calls on this long stock that I have for PENN and sold the Dees 90 calls in there for $1 even. I'm trying to get out of them for 10 cents. They were trading right around 17.5 when I put that bid in there. Do I want the penny or do I want the trade? Well, I wanted the nickel, and the market has blasted off like ever since I put that order into cover. So it doesn't look like I'm going to get out of that anytime soon. As a matter of fact, I think it's trading at least around 50 cents. But throughout this time of owning PENN, I've been able to lower the overall cost basis on this trade. Let's just take a look. I sold the 45. I did not end up selling those. I sold 65 calls for I ended up selling only the 85 calls for $1.35. I tried to do covered calls at the 45 calls, the 65 calls. Those never ended up working out. I never ended up getting my price for those. But in the October, I did sell the 85 calls and lowered my overall cost basis by $1.25 in that trade there. And then I also sold these 90 calls for $1, trying to get out for 10 cents. So lowered my overall cost basis so far anyway by $1.25. This would add another 90 cents to that overall cost basis. And if I get called away at 90, that is a huge win. I bought it at $4.50. So I would be happy to roll that out and take that profit into my IRA. So that's about it. I haven't done anything else. Yeah, right now that trade is actually quite close to 90 cents when I was trying to get out for 17 this morning. But again, like I said, I'd be happy to get called away, or I want the lowering of the cost basis on that. All right. Take a moment to go over the disclaimer here. As we're an educational company, I'm not here to try and get you guys limbing off the cliff with me. I'm just trying to teach you guys a way to stay mechanical trading options. And this is the best way to do it as far as I'm concerned, by following my guidelines and sticking to those guidelines will help you get in and out of these trades. I'm trying to take some of the guesswork out of it. All right. So if you can't take that, take it easy.